Mr. Brandon Munro, how are you, sir?
I'm great, Matt. I'm in Swakopmund, Namibia, and I just love being in this country. So apart from being good for other reasons, my heart and soul is feeling very contented at the moment.
I bet it is. I bet it is for lots and lots of reasons, not least of all being there. So I think I've stayed at that hotel that you're at.
Yeah,
now,
you have
by
it.
the sea, are we?
Yeah, that's right. Just on the mole here in Swakopmund. Great location. Anyone who doesn't know Swakopmund, have a quick Google of it because it's a fabulous little town. As you'll remember,
Food.
Matt, great food, nice people, relaxed, safe, and it's been described by the guidebooks quite accurately as it's like a ski village that's popped up in the middle of the desert because it still has a lot of the quaint old German architecture from colonial times. You remember that?
It does. Yeah,
the cognitive dissonance.
It's actually beautiful.
In a funny way. Yeah,
I like it. Right. Anyway, this isn't a holiday show. This is a uranium show, Brandon. So, let's talk uranium. So you're in Namibia. You've been busy with the team there, and you've been busy moving the chairs around a bit. So Ronnie no longer with us. What happened?
Well, nothing's happened except that things have been going well enough for us as a company that after 15 years, Ronnie feels that it's really ideal timing for him to step away. And Ronnie's made an incredible contribution. I mean, you've had a lot to do with him. You've seen him in Namibia, and he's been there through thick and thin for us. 15 years is a long time, and I can certainly relate to his desire to want to step away at a time when the company's in fantastic shape, and getting our mining license at the end of last year, which leaves us fully permitted and shovel ready. For him, that's the ideal time to say adios. 15 years, it's been great, and onwards and upwards for the company.
Where does that put you? Because I think one of the things that's so kind of very apparent in this sector is lack of experience of having built mines, and that kind of generation is moved on. Is Rodney still going to be around, as and when required? Is there any kind of consulting, or can you pick up the phone to him?
Yeah, absolutely. We've got a formal arrangement where I can pick up the phone to him. And that's in the resignation letter. He offered that, and we gladly said, well, yes. And we've been through a lot together. I first met Ronnie about 2 months after he was appointed when I was living in Namibia here. So very deep experience with the company. He's got an enormous network, highly respected person. So in many respects, it's goodbye for now, but not goodbye forever.
Great. And so, so you're stepping up into the chairman role. What does that do in terms of what you're going to be responsible for, and what are you relinquishing, and who to?
Yeah, so it's the who to point that's so important here. We've now appointed Gavin Chamberlain, who you met this time last year in Cape Town, extremely competent project builder. And he's now appointed CEO. He's been our chief operating officer for a year, done an absolutely magnificent job. It's been a pleasure watching him in action, and very much earned the right to step up to CEO. And it comes at a good time because, a lot of people want me to stay involved, and I want to stay involved. And so to be able to, with Ronnie deciding that now's the right time to go, it enabled a little bit of a shuffle where I can step up into the chairman role and give Gavin all of the flexibility and to enable him to do the proper CEO role while I'm still involved and remain full-time involved as executive chairman.
Well, actually, and talk to me about, where you're at, because I was talking to Andre Lieberman, who is Yellowcake. They're the kind of the European equivalent of SPUT, Sprott Physical Uranium Trust, for those listening in. And he was sort of questioning some of the supply side numbers being used out there in the marketplace. He thinks that there are going to be some companies perhaps aren't going to be able to deliver on time, and maybe even not at the volumes that they're suggesting. So for you guys, you got your mining license, you got some money in the bank, and you're working towards an FID. Can you explain why you believe you're in better shape than most to actually get over the line and get this thing built and into production?
Sure, love to. So we've got all of our environmental permits, as I said. We've got our mining license. We've got our heritage clearances. So in that respect, from a permitting and a governmental point of view, we're shovel ready. Then the next thing you work through is, well, okay, technical work. So We completed a DFS more than a year ago. We've continued throughout that time with front-end engineering and design. We're using that big cash balance that you referred to continue on with that work. And a lot of what we're doing, you would only start once you've got a debt facility in place and you've fully financed construction. But we're in this very privileged position where, number one, we've got a big cash balance. And secondly, a lot of these things don't cost a lot to do in a country like Namibia. So we've already commenced with the access road to site. We've already commenced with the water pipeline for temporary water supplies during construction. So when we're ready to say, right, we push the button, we're not then starting, right, how long is it going to take to build the water pipeline? We can't lay any concrete until we've got water on site. All of that's ready to go. So we're maintaining a strong walking start on being construction ready. But fortunately, we can do that with very limited deployment of capital. So when we announced the mining license, we immediately awarded those 2 contracts. And to the cost of the flexibility that I'm talking about was only $2 million in the context of a cash balance at the end of that month, which was 37 million Australian dollars. So it's a very incremental spend that maintains total optionality and total flexibility as to when we're ready to push the button and start the big construction steps like buying crushers and concrete works and so on. And that's what we can continue doing. We'll start looking at detailed design next. For modest amounts of capital expenditure, we can progress from FEED into the detailed design. Again, that's shaving time off our normal construction timeline. So it perfectly preserves our endpoint delivery of pounds, whilst we can remain fully flexible on timing the market and selecting the best of our range of options for how we do finance the mine into construction.
Right. And the next question is around that timing, because the market is very excited at the moment. The bulls are loving where we're at now, and everyone should be. But with my banking hat on, we're going, well, that's great, but we need to see that in a sustained way. We need to make sure this isn't a spike and it doesn't come off for some reason. I suspect likewise for you're going to want some evidence that, what evidence do you need to be able to inform your decision around timing?
So the sustainability comes in the form of long-term contracts. So for us, where we need to correctly exercise our judgment in the best interests of all stakeholders, including shareholders, is at what point and on what terms do we start entering into long-term contracts? And once we've done that, if we can do that on the right terms, then that protects the medium-term sustainability of the mine, because that will lock in either base price escalated contracts at a price that's attractive, or it'll lock in floors with a corresponding upside up to the point where we'd need to write ceilings. In a broader sense, and now if we switch to the macro for the moment, the sustainability of prices in the current realm, so give or take $100 a pound, that seems really solid to me. We've had a uranium price come to $100 a pound, and other than some restarts of assets which are coming on stream at the moment, you can't name a greenfields uranium project that started construction of any significance. The one that did start partially funded construction in Niger, there's now some doubt over when they will come into production because of all of the political situation that's occurred in that country. So at $100 a pound, if it hasn't created a rash of new production, well, that tells you something about the medium to longer term supply equation here. And no one knows better than our team at Bannerman just how challenging it is to bring a uranium project into production. And that's in the dream destination of Namibia, where a whole raft of challenges are simply taken care of by a 45-year history of producing uranium, excellent logistics and infrastructure, and a supportive government and local community. You can then layer in those challenges once you start talking about other jurisdictions. So to your point about sustainability, I feel that this current pricing dynamic is sustainable well into the medium term, because it's going to be hard bringing on that production. And something that I hope we get onto, Matt, is just a few minutes before we started recording, I saw the first snippets of the Kazatomprom news come through. So I haven't had a chance to fully digest it, but I've done a few sums in my head, and that speaks volumes to how much fun we're going to have as investors in this uranium sector over the next couple of years.
Well, let's talk about that. Because they obviously put out their 2023 operations and fourth quarter data. But I think the thing that people are most interested in is the 2024 non-financial outlook. Yeah, like you say, pretty interesting times. So tell us a little bit more of what you made of it and how you felt when you read what they were guiding.
Yeah, well, just at a quick glance as we were setting up and it came through. When we were in London together, we talked about the warning that Kazatomprom had put out into the public domain that they wouldn't be achieving their guidance. And so everyone's been waiting on this moment to see, well, to what extent do they not achieve the guidance? And it appears that on a 100% basis, so for everyone out there, what we mean by that is Kazatomprom have got a raft of different joint ventures. So joint ventures with everyone from Orano, Cameco, CGN Mining, the Chinese giant. They've got traders who have interests in their assets. Uranium One, the Russians, and some other smaller parties amongst all of that. Now, if you ignore the Kazatomprom portion and the joint venture portion on a 100% production basis, they're going to miss by 9 million pounds next year, this calendar year. And it seems to be that there's even some guidance that there could be downside to them from that. Now, let's just put that in context for a moment. 9 million pounds, that's a very substantial number when you think that total demand is circa 180 million pounds, and that 9 million represents about 6% of current primary and secondary supply. So what we're seeing now as a result in this market is, depending on how you forecast secondary supplies and the production that's coming in from restarting and expanding assets, that's Langer Heinrich, Honeymoon in Australia, and the restart and expansion of MacArthur River in Canada. We're talking about a 25% widening of the deficit in this sector as a result of this guidance that Kazatomprom's given. So for a sector that's already in significant deficit without any substantive available mobile inventories to balance, and now that deficit is just being widened by potentially 25%, that should be a real signal for people to stand up and take notice. And I think what we should expect is that for us who've been following intricately the moves in the uranium sector, this doesn't come as a surprise at all. But imagine you're a fund manager who's only really thinking about uranium as an investment class for the first time, and you sit down and you start working through the numbers. You'd be calling your analyst back in and saying, "Hang on a sec, whoa, you've got your numbers wrong. Something doesn't make sense. Like, surely this can't be right. Surely you can't have a commodity which is the unsubstitutable fuel source for 10% of the world's electricity, and it's already a deficit like this, and we've just seen the news come in on the newswires that deficit's going to be 25% broader." Run those numbers by me again, and then that's going to get people's attention. And when the generalist investors start to come into this sector, I think that's where the uranium investors who've done their homework and been watching the sector for a while, I think that's where they'll start to experience some good feelings and rewards.
Yeah, I think it's, sorry everyone, I'm suffering from a bit of a cold, spluttering my way through this conversation. I thought it was quite interesting that they attributed this shortfall down to construction of surface facilities and infrastructure, which was then, I guess, in turn, because of delays to design, document, approval, which also was affected by the ability to access the sulfuric acid. It's like a series of things which have not gone well for them, and that's not only going to affect the ability to hit 2024 numbers, but also 2025 numbers, because they've yet to kind of resolve the sulfuric acid component of this. So this is the world's largest producer of uranium. They are experiencing problems, despite having, all of those people and all of that experience and all of that history of producing. And that's what it comes back to, as earlier this conversation around how do you ensure that the supply numbers being touted around the market at the moment are accurate? Because if an experienced group like that is having problems, what's that going to mean for people sort of new to it? I know you guys have, you've got a team of people who built before in country and so forth. But I'm looking at everyone else. I'm not looking at you, Brandon. I'm looking at everyone else and going, well, how do you mitigate all of that risk? There's surely going to be some delays, and that's going to put even more pressure in terms of availability, and then presumably on the upside, price. Will have a reaction as well.
Well, absolutely. And that is the narrative of our sector over the last few years. There are an array of projects who have expectations and make promises about production. So both existing projects, such as all of the joint ventures in Kazakhstan, but also the new greenfields companies that are coming on stream over the next 10 years. Inside the industry, we know that you can't add all of those up and simply apply a little bit of a sort of a risk factor to it. We know that there are projects amongst those that don't have a chance. We know that there are projects amongst those where they will be locked up in environmental and political permitting quandaries for years. And, within Bannerman, we take a view on a project by project basis because there aren't that many assets in this sector, so it doesn't take a lot of investment of time and intellect to form a view on each and every asset. But for example, the World Nuclear Association can't take that sort of an approach because it can't choose between its children, so to speak. What World Nuclear Association does with its supply modelling is, as a group, we agree what is a reasonable factoring. So they add up all of those pounds. They say, right, are we going to see 70%? Are we going to see 50%? Are we going to see 30%? How much of this pound that's being promised at large to the world are we going to expect to see? And Olga Golyakova, who you've had on the show a couple of times, who works for us, she's intimately aware of those numbers. And maybe next time you interview her, you can drill down with her on that. And what World Nuclear Association also does is they're aware of the delay factor. And so in the methodology for their report, you can read that there's a staged factoring of delay into what companies promise investors and promise other stakeholders. And that's how it rolls. So the reason why it's the narrative of the last few years in the sector is myself and John Borshov and other leaders in the sector have been saying to the utilities, gently or not, that you can't just look at all of these projects and assume that they're going to be there. They won't, and they simply won't. And we've now seen the evidence of that, as I said before. There was a raft of projects that would have utilities believing when uranium was trading at $30 a pound, the narrative was, look, $50 and we'll be there for you. And of course, we've sailed through $50. We're at $100, and only a couple of those projects are starting to come on now. That's a realization point for utilities. And for those who perhaps weren't as sophisticated in the way that they understood the mining chain and the challenges associated with that, they're having a collectively whoops moment, because that conscience comes at a point where they're concerned anyway about supply, about the assured supply, like from Kazatomprom and their joint venture partners. And now they're having a more skeptical look at the capacity of developers to bring their projects in. It's
interesting. By the way, you get a mention in the from Kazatomprom in the press release, which was nice to be recognised. But I think the interesting thing on the supply side is the other thing people need to kind of understand and factor in. So not only is is it difficult, as you say, because there's a lot of phases to kind of get through to get into production, but the ramp up period needs to be factored in, and also the amount of pounds we're talking about from the people who are talking the game of getting into production. Obviously, we've seen, Encore Energy starting production, Your Energy, people like that. But these are these small amounts of pounds. Like even Energy Fuels, like the US is largest producer with one base. They've started operations again at 3 months, but we're only talking about just over £1 million, right? And you kind of go through the numbers about how much. Like a Boss, we're talking about ramping up to £1.8 million by 2026, ramping up to £1.8 million. It's not enough. We need more of you guys to actually, get into production. I guess there'll be a little bit of first mover advantage in this, but it just, again, is a great driver for price. The fact that most utilities will be sitting on 2, possibly in some cases, maybe Europeans, on 3 years worth of inventory. But then what happens? Where is it coming from? You've got Kazatomprom saying, well, actually, we're going to miss our target by 20%. Apologies. You've got Cameco, struggling to kind of get back up and running as quickly as they thought with their projects. It's looking a little bit dark out there on the supply side, if I'm honest. I get that it's become a supplier's market, but you also then need to supply, right?
Well, that's right. And what it does mean is that those who have the capacity to supply, and I certainly include Bannerman's Tango project in that very small list, they will be very well supported in terms of the financial and non-financial terms that can be negotiated. And what that means in practice for us, for example, well, apart from just bringing ourselves into production, it means that we can then have the environment where we would expand our production. So for anyone out there who hasn't followed Bannerman Energy, to use us as an example, when we come into production, we would ramp up quite quickly. It's a very conventional and simple project. So the ramp up doesn't carry the risk that a more intricate development would have. We'd ramp up quickly to £3.5 million per annum. However, it's such an enormous ore body that we're seeing an increased number of questions from utilities and investors along the lines of, well, how quickly could you expand? Could you double that? And the answer is, well, yes. And we've talked about that throughout the feasibility phase over the last several years. There's a very clear pathway for us to be able to go from £3.5 million per annum to something like £7 million per annum. And it's a really attractive proposition both for us and our customers, because we're not buying a separate project where we have to suddenly understand the new geology, where we have to get used to a new operating environment, where we have to employ a new workforce and so forth. It's right there. It's exactly what by then we would really understand very, very, very well. So we just simply expand.
Have you done a study on that? Remind me, you've done the study on that, have you?
No, we've done a lot of internal work. So we did critical flaw analysis. We understand internally what would be required. We've got a good understanding of where the decision points need to flow once we're already in production. Because the way that an ore body like this works is you've got several opportunities to say, that's the cutback where we're going to cut back a bit more so we can access more ore. Here are the timeframes where we need to start ordering the kit if we're going to, for example, double our crushing circuit and double our processing circuit. So very good understanding internally, but other than the explanations that we gave in the definitive feasibility study, we don't have the firm numbers out there in the public domain.
Right. Okay. Well, look, I think we'll wrap it up there because I know you've got places to be. I'll see you next week I'm slightly jealous of where you are at the moment because I did enjoy my time in Namibia. I'll see you next week in Cape Town. Lots of conversations happening with African projects. There seems to be a lot of people interested in Africa at the moment, which is nice to see. So enjoy your rest of your time there and safe flight and see you soon.
Thanks, Matt. All right. See you next week.